and welcome back to yet another exciting week of the Lazy Money Game. In this week's episode, I will give an update to my portfolio, and then I will answer some questions which I have received from the audience. So as always, we start by noting that there's a green circle around this week's episode, meaning that the portfolio is up in value. The portfolio has increased to $70,000 in value. So if we go to portfolio value, we can also see it here, which is an increase of 1,700 compared to last week. And of course, we need to subtract any cost that I have added. And you can see that the cost has gone up with $500. So I have gained $1,200 within this week. If we then look at all the companies in the portfolio, we can see here that I have 26 different companies. And of those, it is only 7 of them which have increased in value since I have originally bought them. And the $500 which I have invested this week went into Abbvie. Abbvie is by far the largest position which I have in the portfolio, but due to my initial research on the company, I still have a strong belief in them, and there's nothing that has changed, so I am still comfortable putting more money into this company as long as they are trading at the level at which they are currently doing. One important thing to note here is just because I'm comfortable with putting more money into Abbvie and making it weighing more than 13% in my portfolio doesn't mean that you should be. I know in Denmark, for instance, we have some rules. If you do individual investing with your pension fund, you are not allowed to add more than 20% into one individual company. So one might ask, why haven't I invested more in Carnival Corporation since it is the position I have, which is by far the most down since I have initially bought it? Well, the reason why I haven't bought more into Carnival Corporation, or are currently not planning on doing so, is because I don't like the outlook for the company. I mean, the cruise line industry is currently struggling a lot. That is no surprise to anyone due to the current situation. So just because a company is down a lot since I have initially bought it, I still have to look at the outlook for that company before I decide to deploy more money into the company. Well, why haven't I invested more into Realty Income Corp and Starbucks, for instance, since they are the companies which have increased most in value since I have originally bought them? Well, I wanted to do dollar cost averaging, so I started an initial position and then I wanted to buy more along the way. But unfortunately, the stock actually increased quite quickly in value, so I didn't have the chance to add more. There was other opportunities which I took advantage of instead at the time where I bought some other stocks. Unfortunately, when you look to the situation today, then you could say that was a mistake, I should have bought more here. Well, you can never know that, and you will always make these kinds of mistakes when you do investing. And this is of course one of the downsides to do dollar cost averaging, that sometimes you will not be able to build your position to the level you actually want, simply because the stock has moved so much in price that you do not longer find it attractive or within your margin of safety to buy more. So one of the reasons why I, for instance, added $2,000 into my initial position of Unum Group was because I thought that the stock was so heavily undervalued, and 1 week later, meaning this week, it seems like it was a good choice. But the next week or the week after that, or 2 months from now, this could show up as a complete mistake as well. No one knows, and that is the whole point here. You have to look into the individual companies and then decide whether or not you think this is an attractive price to buy at. And that is what I'm trying to do with the guidelines. Or phrased differently, instead of focusing on the short-term volatility, I focus on the fundamentals of the business. So if I evaluate a business and I think that this is how much the business is worth, then I add my margin of safety, or you can say that I subtract that from the stock price. As long as I am below that value, then I'm willing to buy more. If the stock then explodes in value and are ridiculously high priced, then I would consider selling. That has not been the case for me due to the nature of the stock market after I have done my investments. Or If the stock falls a lot in value and I lose faith in the company, then I would also consider selling. That was the case with Delta Airlines in my portfolio. If we then continue to the dividends tab, then we can see that not a lot have happened within this week, since I have not received any dividends. So currently I'm still on $31.69 for October. But if we go to this yearly income estimate, then we can see that this number is close to $2,300. This is a simple summation of all the annual income dividends, which is on the overview arc, and then they are multiplied by 0.85 since I have to pay 15% in withholding tax. But what I want to highlight here is my year-to-date received dividends are $1,483. And if I divide that by the 10 months, that gives me an average of $148 per month. But for next year, that number would be my yearly estimate divided by the 12 months, and that would give me $191 on average. So just by holding this portfolio and keeping it compounding, then I would increase my monthly dividend with around $40 just for having the portfolio compounding by itself. So here we can see how much the portfolio is actually starting to contribute into itself. If we then continue to some more company specific news, then we can see that Bank of America has declared a dividend which is in line with previous, which at the current share price gives it a forward yield of 2.99%. And if we continue, then we can see that Synchrony Financials has also declared a dividend which is in line with previous and at the current price giving it a forward yield of 3.27%. Why is this so important to me? If we check out my portfolio, then we can see that Bank of America and Synchrony Financials together make up more than 10% of my portfolio. So that is at least nice to know that I will receive the same dividend going forward. And if we continue with the company specific news, then we can see that JP Morgan fires shots at Square and PayPal with a new product called Quick Accept. So Square and PayPal have allowed their customers to receive their money the same day. So what JP Morgan has done is they have launched this product called Quick Accept, and it allows small businesses to receive card payments through mobile apps or contactless card readers, while those businesses will receive the money the same day into their account. And since JP Morgan is really well established in the banking industry and has a lot of clients, it can start to flex some of that muscles and migrate a large portion of its more than 3 million small business customers into this new service. So really trying to outpace the competition that they are seeing for these fintech companies, simply just by using their size. So let's continue to questions from the audience. Hey LMG, what is Goodwill? So the short answer is Goodwill is the excess of the purchase price paid for an acquired firm over the fair value of its separately identifiable net assets. So what does that actually mean? Well, if company A buys company B or buy assets from company B, so in this case we have money going to company B and company B are delivering assets to company A. That could be a factory or something like that. Then if company A pays $100 million and the net assets from company B are worth $80 million in fair value, then the difference between the purchase price and the net assets will be put on the balance sheet as goodwill, and in this case $20 million. So just to show a real life example, I went to Yahoo Finance and looked up Abbvie, since that is my most recent purchase. Then I go to the financials, go to the balance sheet, and then I simply scroll down until I find Goodwill, and you can see here that Abbvie currently have more than $15.5 billion of goodwill on their balance sheet. If we then continue to the next question. Hey LMG, how many stocks should I have in my portfolio? Unfortunately, there is no obvious answer to that question. How many different companies you need to have in your portfolio really depends on who you are. If we take a look at Warren Buffett and Berkshire Hathaway, for instance, then I found this article from May 2020, so it's not completely up to date. For instance, here it mentions that you still have some airline stocks and stuff, but just in general, let's assume that he has around 47 stocks. Then, simply due to the nature of the size or the money that he is managing, he has to have a lot of companies because there is so much capital that needs to be invested. And if you go to another extreme, to Peter Lynch, for instance, he was famously known for having more than 1,400 different stocks at one point when he was in charge of Fidelity Management back in the days. And that is when we are talking about professional investors who is managing billions and billions of dollars. If you take a look at my portfolio, for instance, currently 26 stocks. I know people who would say that is way too much. I would also know people who would say that is way too little, because they would prefer that you are buying ETFs and simply buying the broad market. And to do that, if you buy an ETF, then you can easily have 1,000 companies within that, or even 10,000 companies. So it really depends on who you ask. The question really depends on what you believe in. If you believe that the market is complete and rational, then there is no need for you to go and try and search for better deals than what the market can provide. So then you should just buy ETFs. But if you believe that the market is incomplete and some people will have an advantage over other people, then you have to go and start looking for individual companies and individual deals. But how many companies you need in a portfolio like that? There simply is no answer. Because as you can see, it really depends on who you ask. Warren Buffett is famously known for, when he was asked the question if he thought that Peter Lynch had too many stocks, and then Buffett answered and said, well, he did a tremendous job, but I would probably have done poorly if I have tried to copy him. So how many stocks you need in your portfolio simply varies from person to person. So if you liked what you see, then please consider subscribing, leaving a comment, or give me a like. That really helps out the channel. And until I see you next Sunday, bye!